Good morning and welcome to the Totally PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Wendy Lawrence, CEO, and Lisa Barter, CFO. Good morning to you both.
Good morning. Thank you, and thank you to everybody that's logged in today for us to talk to you about our preliminary results. I think it goes to say, and for any of you who've already read the RNS, we're really pleased with the results that we're presenting to you today. So hopefully you'll find the presentation helpful. So without further ado, another record year for Totally, record revenues and profits. We completed two very exciting strategic acquisitions during the period. One of them was completed in December, which was our Energy Fitness Professionals, followed by the second acquisition, completed just at the end of the first week in March, which was Pioneer Healthcare. And also we delivered services to just over 2.5 million patients during the period. So talking a little bit about our trading divisions, and apologies for those who are regular people who engage with the business, but just giving you a little bit of background. We deliver services through our divisions and businesses. Totally Urgent Care delivers services which are generally those that we don't have an appointment for, and where patients want to access healthcare services quickly. So typically that's NHS 111 services, both online and telephony, urgent treatment centres and GP out of hours. They're delivered by two of the companies that we've acquired, being Vocare and Greenbrook, but work in one division under one leadership team. Totally Planned Care is the opposite of that, and you tend to have an appointment when you actually engage with our Planned Care division. We provide physiotherapy, both in healthcare settings and also in prisons. And we also deliver dermatology services from outpatient services and some community dermatology through our Planned Care division. Planned Care was the one that was hit the most during the pandemic when elective services stopped, but I'm very pleased to say that what you'll see in the numbers today is that they recovered that position and are now working back with the NHS and dealing with huge backlogs on waiting lists. That leads me nicely on to Pioneer, the acquisition that we completed in March, which we were really excited by, and it complements what we'd already done with our startup business, Totally Healthcare. So we have already incorporated Totally Healthcare into Pioneer, and we'll be trading as Pioneer Healthcare, part of the Totally Group, and delivering insourcing services, outsourcing services, and also benefiting from the status of any qualified provider, which means that not only will we be working with hospitals to reduce waiting lists, but we can also accept referrals into our service from GPs via the AQP status. Last but by no means least is Energy Fitness Professionals, a little bit of a different venture for us, as that part of the business focuses on corporate wellness. We met the guys from EFP some time ago. We've been working with them over many years, just looking at what their business does. And they are a provider of corporate fitness and well-being to blue chip corporate clients. They have long relationships with their clients, who include the Royal Mail, Ministry of Justice, Ministry of Defence, McLaren, Aviva, long list of organisations that they work with. And they provide gyms in-house for employees to benefit from physical fitness, and an online presence where you can access group classes and personal trainers. But we're looking at how we expand that, and also looking at not only physical health and physical wellness, but also mental health, mental wellness, and spiritual health as well. So looking at what we can benefit from across the rest of the Totally Group to actually grow EFP. And the way that I've explained it so far to investors is, if you think about the three companies on the left of that slide, we're very reactive to ill health, whereas on the right-hand side in EFP, we're looking at proactive wellness and proactive looking after yourself and not becoming ill. So there's a little bit of a different focus for us. So keep your eyes on that, because we've got some exciting things coming out with EFP. The following slide, very similar to the slide I've just presented, but we included this one just so that it gives a little bit more details of the services that we provide. But I'm not going to repeat myself, because I think I've covered that on the previous slide, but it's just a slightly different way of looking at it, and it gives you just a little bit more information of how we provide our services. Again, just to give a little bit of context to our investors and those people that may be thinking of investing in Totally, we sit there alongside the NHS providing capacity when demand actually outstrips the capacity that they've got themselves. We are very well embedded with our NHS partners. We're not in competition with the NHS at all. And certainly during the pandemic, we helped the NHS to create more capacity when demand was actually outstripping that, as I'm sure you know. So just a little bit of context. Delivered services across the period to just over 2.5 million patients. 1.4 million plus patients assessed by our NHS 111 services around the country, and also our clinical assessment service, which sits behind 111 when you talk to a clinician. That's classified as CAS. 800,000 patients treated in our urgent treatment centres across the country. We are the largest private provider of urgent treatment centres, and typically those UTCs sit at the front end of A&E. And we stream patients through and actually treat the patients that we can very quickly, making sure they access the service that they need quickly, responsibly, and a high quality output. 180,000 patients benefited from our out of hours services. So that's when you access GP services out of hours, whether that be by GPs visiting in your home or whether attending one of our centres for an out of hours appointment. Circa 30,000 physiotherapy patients, 55,000 community dermatology appointments, and you'll see there 28,000 patients benefited from our insourcing services. And just to remind you that the 28,000 typically applies to Totally Healthcare, because that doesn't include Pioneer activity, given that we only completed that acquisition right at the end of the period. So you can expect to see those numbers increase significantly. And for EFP, over 11,500 gym members. So you can see that our reach and impact on people is quite significant. So I'd now like to hand over to Lisa, who will take you through some of the financial highlights.
Thanks, Wendy. Good morning, everyone. So yes, we're really proud of our achievements from last year, above expectations and strong performance in all areas. So we were very pleased last year to have delivered a profit before tax, and this year we're delivering a 1.3 million profit before tax. That's resulted in an increased earnings per share. We've had 10 million revenue coming from our insourcing services. We've completed 2 very strategic acquisitions, as Wendy's already described, one in the wellbeing and one to help tackle waiting lists. And urgent care division margin was maintained at 17.8%, which is great progress from the 12% we were seeing when we first did our acquisition of Vocare. And we've seen a reduction, despite all of this and our growth, we've seen a reduction in admin costs as a percentage of revenue, which has dropped down to 13.1% from 14.5% in the previous year. So, outstanding trading performance. As I said, we're really pleased with where what we've achieved this year. Revenue up to 127.4 million. 11.2% growth was organic. 1 million has come from the acquisitions in year. Obviously, one acquisition in December and one in just 3 weeks of the year. So completed in March. So revenue up 12%. Our underlying EBITDA, we had a market consensus expectation of 5.4. We upgraded this when we did the acquisition of Pioneer, and we came in at 6.2. So we're very pleased with a 24% increase in our EBITDA. Underlying being, of course, that's before the 200,000 of acquisition costs we've shown as exceptional in the accounts. And gross margin for the group, 18%. Some slight reduction on last year. Last year was a good year with all of the COVID opportunities and extra work we were doing. That work has continued, but the impact of COVID also meant that for our insourcing business, so our totally healthcare, they were doing much lower margin procedures, so more endoscopies and colonoscopies than the higher margin procedures that we can now do and Pioneer are already doing. That was always our plan. Positive cash generation at 15.3 million, having done the acquisitions in year 2, funded, obviously. Record revenue across all the divisions. So we see that urgent care, we're now 86% of our revenue is urgent care. Our aim, of course, always to have a reasonably balanced portfolio of different services. We've seen planned care come back post-pandemic to 7.5 million. Still some reduction in the number of face-to-face consultations that we can see, but it is normalised. And of course, Totally Healthcare, our startup, we delivered 1 million in the first year. Then COVID hit, we delivered 3 million, and we promised 10 million, and we've delivered near on 10 million through just our organic growth, and that represents the majority of the growth in revenue for this year. The M&A activity, so Pioneer and EFP, that contributed 1 million of revenue in FY22. 0.7 million was contributed in those 3 weeks. So we're looking at, with EFP and Pioneer combined, we're looking at a run rate of 12.8 in additional revenue through acquisition. Just finally, just going back on our core metrics, 18% margin. As I've explained, I mean, I think 18% is a great margin for the business that we have at the moment. I'm very pleased that urgent care was able to maintain its margin at 17.8%. Expect the rest of the business margin to improve as we are able to do more higher margin business. EFP margin as well, of course, still a small part of our business, but enjoying much higher margins than we see in our other businesses. Underlying EBITDA, as I mentioned previously, 24% up, and a substantial increase in our profit before tax. Cash, we've now got a £5 million rolling credit facility in place with our bank, NatWest. That's for working capital and for acquisitions. We can use it how we wish. And those of you that have listened to us before will know that our working capital movements are quite significant within a month. So it swings up and down. So was always keen to keep 4 million aside for working capital requirements. We do have a negative working capital cycle, but with the acquisition of Pioneer, it's a different model in terms of how we invoice and when we collect the cash. We have to do a lot more reconciliation and agreement of the procedures we've carried out. We also need to code them. So that means that we bill a little later. So we have positive working capital in that business. So again, the portfolio effect makes that more manageable. But of course, we are still a negative working capital business, as many of you will know and hopefully now comfortable with. It's something we've talked about many times. Cash in the bank of 15.3 million after funding our acquisitions, which cost 7.4 million. Those of you that have noticed on our RNS, we have deferred consideration payable on the acquisitions of Pioneer and EFP, most likely to be paid out, certainly Pioneer, fairly soon, before the end of the year, and that's up to another 6.1 million of consideration. I hand back to Wendy.
Thank you. So all in all, just looking across all of our KPIs and our long-term strategy, we've made significant progress against all our strategic objectives. You've already heard core market growth, acquisition of Pioneer will obviously assist that. We've successfully mobilised new contracts, so they've been announced during the period. New services in Staffordshire for GP out of hours, which was a new contract, and extended GP out of hours across Staffordshire, where we're now the one provider of that service. We also mobilised new urgent treatment centres in London, continued the delivery of COVID-19 specific services. Some have changed, some will continue, some will drop off, but obviously I think we all know now that COVID is here to stay. It's now an endemic disease that we're managing, and we'll be working closely with the NHS as that impacts on the population over the winter months. We've developed new models of care. We do a lot of our work now with virtual streaming and trying to stay innovative and deliver those new services with the NHS. So again, I've already talked about new contract wins. We are driving benefit through the identification of synergies. We've implemented a new integrated HR and finance system. All of this helps our internal processes and obviously helps with making sure that those processes work as well as we can. We've launched a group-wide intranet for our staff, and having acquired many new businesses over the last few years, we've made sure now that we've done a fully integrated email system. Being able to communicate through a group-wide staff intranet has many benefits from us. And you will also have noticed that we've launched new websites and we've gone through a rebranding. I do have to say our new Director of Comms and Marketing has had a big impact on this, and I hope now that you will recognise we're trying to give you much more visibility and interaction with the business. Building strong long-term relationships. Again, for those of you who have engaged with Totally in the past, you'll know that I've spoken a lot around the high quality of our services, and it really does matter the way that we do our business delivers that high quality service. So all of our CQC registered service with the Care Quality Commission continue to be rated as good. This is really important for us and for the staff. They want to be proud of the organisation that they work for. Multiple contract extensions. And again, really, really important part of our business. When you see a contract extension come through, this is what underpins our revenue and means that, the NHS are happy with us. If we weren't good at what we do and if we didn't deliver a consistent high level of service, it's very easy for the NHS to switch providers. But I'm very pleased to say that the vast majority of our contracts renew. And when we do move away from a contract, it's normally a conscious decision by ourselves based on whatever the specification is and what service they're looking for. We do remain acquisitive, really excited by what we've done in the last period. And as I say, towards the end of the year, 2 acquisitions which are providing excellent opportunities for us. The opportunities are massive, so please watch this space. But we do remain acquisitive. We do have cash in the bank. We're not a bank, and we will be looking at how we use that to underpin the growth of the business and any exciting opportunities that come our way in the future for adding immediately earnings enhancing companies to the business. So market continues to present significant opportunities, ongoing COVID-19 challenges. I think I've already talked a lot around the opportunities. We will be making sure that we do our part for making sure that the NHS has capacity that it needs to deal with the demand. We know that COVID is here to stay. We've got to make sure that we continue to help them bring down the waiting list. And I'm sure in the press you've read it recently, 6 to 7 years they're actually estimating it will take to bring down the current waiting list back to pre-COVID levels. So, very, very busy time for all of us. Challenges. Continued uncertainties. We don't know where COVID is going to go, but we're doing our bit to keep our staff safe and the general population safe. We have got increased demand on services. NHS 111 and demand into the urgent treatment centres remains very, very high. And I think like every other business coming out of the pandemic, bringing people back to work, recruiting into new roles is a challenge, whether that's a medical staffing, clinical staffing, whether it's a new accountant or an administrator. It does seem to be a little bit harder nowadays. That also goes with increased cost pressures on wage inflation. But I do have to say, we've got a lot of the things in place already in-house. We run our own staff bank. We work proactively with agencies to make sure that we've got them on board working with us, and we've got an excellent recruitment team in-house at Totally. So we know what the challenges are, and it's just now about making sure that we work those through with our staff. So I think overall focus for the future is very, very clear. We will continue to do what we've always done. We will secure new contracts. We will extend what we're doing. We will look at new models of care. We've already talked about that we do remain acquisitive. We will be looking for exciting businesses that come our way that we can add to what we do to help us take the opportunities forward at a greater pace. We've also obviously looking to fund those ourselves where we can possibly do so. So as the final slide, just going over record results, revenues up 12% to 127 million, EBITDA up 24% to 6.2, and just reminding you that the consensus EBITDA target for last year was 5.4, which we upgraded. We've strengthened ourselves for the future, 2 great acquisitions that we will talk to you more about during the period. Significant opportunities, urgent care services under demand, record numbers of patients waiting to be treated, really focused on corporate wellbeing and bringing people back to the workplace, and very much our buy and build strategy remains in place. So thank you very much. That brings an end to the presentation.
Wendy, Lisa, thank you very much for your presentation. And ladies and gentlemen, please do continue to submit your questions just using the Q&A tab situated in the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Wendy, Lisa, as you can see, we've received a number of questions throughout today's presentation, and thank you to all the investors for submitting those. Could I just ask you to read out the questions and give responses where it's appropriate to do so, and then I'll pick up from you both at the end.
Yes, thank you for that. So we'll work through and we'll answer as many as we can. Any questions that we don't get to answer, we will try and follow those up and provide an answer back to you. So Andrew N. Hi, Wendy and Lisa, impressive results. Do you intend to do any more acquisitions in this year? And if so, will they be funded by existing cash? I think I've probably answered that in the presentation, Andrew, but thank you again for the question. We do remain inquisitive, and if they are going to add something to the group, if it expands our opportunity to do something exciting, we will be looking at those. And we've done well on cash, so we would hope to be able to fund those from our own cash. Nothing that I can update you on at the moment. Mark R, how do you feel about the recent share award to senior management, which was quite sizable, and are there more due in the future? I'd just like to remind investors that that was part of an LTIP, a long-term incentive plan that was there for the board directors. It vested over a 3-year period, which concluded in June this year. And of course, whenever an LTIP vests, it's very, very pleasing. It didn't vest at its full amount, as I'm sure you saw when you did the details. We got about half of what was actually there in the LTIP, but it's like anything else. Those incentive plans are there to make sure that we remain incentivized to do so. So the simple answer is yes, of course, we're pleased. It did vest at around 50%, and it was all based on share price achievement. Are there more due in the future? There are no LTIPs in there at the moment, but our board is actually looking at what they do next and how senior management would benefit from a long-term incentive plan. Sam B, what are the typical payment terms on a contract, and what risks have you faced re clawbacks, disputes, non-payment? What is included in trade payables? I'll let Lisa pick that one up in a moment, but if I just talk about the payment terms of a contract, it varies depending on what part of the business that you're in. So typically speaking, urgent treatment centre contracts, 111 contracts, the larger contracts are based on a block with a trigger for overachievement or underachievement. So the way that we deal with that is we agree a level of activity and a level of payment at the beginning of the contract. We invoice a 12th every month, and typically we will raise an invoice for June and we will get paid in June, so we know exactly what day we're going to be paid. And then any under or over performances, we tend to true up and have a discussion with the commissioners on a quarterly basis. I do have to say that during the pandemic, a lot of the KPIs were dropped because, as I'm sure you're aware, services were under such pressure. 111 demand was through the roof, whereas when we were in lockdown, people were discouraged from attending walk-in services in urgent treatment centres. So, there were ups and downs all over the place. So we work with the NHS proactively to manage that. We don't really get into disputes. We don't let things fester. If things are bothering us, or if things are bothering the NHS, we've got good, mature relationships where we talk about those things. if we have any issues with contracts, we do the same. Lisa's already talked about the differences in Pioneer. That's not block contracts, that is you get paid for what you do, so each individual patient, they are coded in terms of what you do, and invoices are submitted to the NHS, so there is a longer payment period on those. And obviously it depends on the case mix of the patients that you're treating, but the vast majority sitting in the urgent care division are those block with the trigger. So we know exactly what we're getting, and that's why Lisa's already said you will see the swings in you know, that when we pay the staff, we have a big outgoing, but also we get that cash back very, very quickly. And I do have to say the NHS is an excellent payer. It's very, very rare that we have problems with them. They're not very good at invoicing us for the stuff that they do for us. So typically in an urgent treatment centre, if we have an agreement where, you know, we pay for radiology services for the x-rays that we do, it takes them forever to invoice us for those things, so we will accrue for that. So it always looks a little bit odd, but no, in terms of paying us, they are very, very good. Lisa, I'll hand over to you for trade payables.
Thank you. Yeah, trade payables, well, it is, as it says, it's the invoices that are outstanding to be paid at the end of the month. And really the reason why it is so high is because as a comparison, the trade debtors is very low. And that goes back to what Wendy has just described, in that the majority of our income is pretty much paid and settled by the end of the month that we're working in. So whilst we pay our staff, obviously at the end of every month, we do have overtime that's paid in arrears, etc. So it's the negative working capital. So yes, we actually have got slightly higher trade payables than previously, just the way that it falls. Some of these are quite sizable invoices, but we did again have pretty good payments. I'm not expecting that every year we see an operating cash inflow of 5 million as we've seen in the last 2 years. So there is a little bit around timing there. But the trade payables is you know, we don't hold payments up. What we do find, and I've been digressing slightly, but I have often been asked this question, it's really that the accruals are higher than you would see in a typical business. And that's because the NHS, whilst they're fantastic at paying, when we send the invoice into them and they pay it, they're not always so quick to raise an invoice back to us for anything like property, radiology, all sorts of things that we subcontract. We don't always get the invoices on time. I've never worked in a business where we have rent accruals, but certainly I've seen it for the last 18 years in healthcare. So yes, in comparison, trade payables looks high, but really it's about the revenue and the fact that we're a negative working capital company. Pioneer will change that over time, or at least balance it out, because it's very different. But yeah, essentially we're not concerned about the high payables or accruals. So
thank you.
much more to say.
Chris G, what is the potential impact on margins from staffing challenges, wage inflation, and what mechanisms are available to you to mitigate? So just to explain a little bit of background, the vast majority of our NHS contracts, we do get inflation uplift. So they come in, and I think it's, you know, to be honest, it's just a case of us managing that to the best of our ability. We are obviously all recruiting the same kind of staff as within the wider healthcare sector. We do look very closely at our multidisciplinary team approach. You know, historically in healthcare, and Lisa's just mentioned how long she's worked in this game. Mine's a lot longer because I'm a lot older, but typically in healthcare, you know, we always used to rely on doctors seeing all patients, and we haven't in totally. What we've done is we've made sure that we have an appropriately qualified clinician to see the patients. So we use a whole wide range of clinicians. So doctors, yes, but also advanced nurse practitioners, emergency nurse practitioners, paramedics, pharmacists, dentists, you name it, we look at that multidisciplinary model. So we're doing what we can. And also during the pandemic, we did a review of the terms and conditions and basic benefits for all of our staff, because as we've acquired different businesses, you can imagine they'd all got different annual leave requirements, different sickness. So we've actually done our bit to actually level that out a little bit. So a lot of our staff benefited from those adjustments. So we try to treat our staff well, really value them. Obviously we couldn't do this without them. And so it's about how do you treat them? How do you, we're doing our very best, and at this point in time we're doing quite well. But it would be wrong of us to say it isn't a challenge, because I think coming out of the pandemic, every employer has and is facing those challenges.
Now we've got a question from James D. Can you please explain why contracts acquired from Vocare and Greenbrook are amortised, and confirm that is what is added back to become adjusted PBT and EPS figures? I love this question, and I know Wendy's thinking, yeah, any excuse to talk about acquisition accounting. Some of you may know that when you buy a business, the difference between the value of the assets, or the net assets that you've purchased, and the price that you've paid, the difference, your premium, is your goodwill, and that is an intangible asset. What accounting standards require you to do is break that goodwill down into elements where you can separately identify it. So rather than, in the old days, it used to be just a chunk of goodwill, but now you look at valuing the brand, you look at valuing the IP, you can look at valuing so many things. There are companies, consultants out there that make a lot of money helping you value these things. We've not used any to date. And we also value the contracts that you've acquired, and you show this separately. Now, under IFRS, which of course we follow as a large company, we look at the value of the goodwill every year, and we look to see if it is impaired. So we're not obliged to write that off every year. However, with intangible value of contracts, we do have to spread that over the life of those contracts. So with Vocare, a lot of those contracts were for 5 years. So there is, I think in this period, there was 200,000 of amortisation booked through the depreciation and amortisation line, and 2 million relating to Greenbrook, because those contracts are more recent. We obviously acquired those in 2019. Some of those contracts are coming to an end. We will see some more amortisation in next year, and then it will start to tail off. We will, of course, add more intangible value of contracts on the acquisition of Pioneer. However, that's going to be much lower value. The contracts are shorter, and they're not as large as a 5 million, say, on average, UTC, which we acquired with Greenbrook. So what is added back to get to adjusted PBT and EPS is that amortisation. And in this year, that was about 2.3 million. So that and the depreciation is added back to give an adjusted PBT. And I think the reason why analysts, and we disclose that separately, is because it is skewing things to have that depreciation amortisation included. But it gets written off. The asset is still there as long as we are, retaining those contracts. So that's what the accounting standard is there to do. It's to match what you've bought and the benefit you're getting from it with writing that off. So I'll stop there.
Go on and on with the detail. Do you want to pick the next question up from Andrew?
Question from Andrew. And how much will the 2 new acquisitions add to turnover this year? Well, if they remain on the exit rate that we've seen at the end of this financial year, that would be around 12 million. Question from Steve L.
Okay, what increases have you seen in costs for your staff and consultants? What is the mechanism within your contracts for passing on these cost increases? I think I've already touched on that. So we do get inflationary uplift onto our contracts, and that's calculated by the NHS, and the vast majority of our contracts get that uplift. Obviously for us, we have to look at what increases we put on our own pay costs. We are looking at a cost of living increase that we will be giving to our staff, and I think that's what we need to do. You can't pass on all of the costs through the increases, but we do get inflationary uplift. The key for us is making sure that we manage internally our staff base. The more we rely on agency staff, the more our costs increase. So one of the things that we do internally, we've got our own performance and efficiency task group, which Lisa chairs, which actually looks at all those different dynamics and what can we do. We run our own staff bank. We have our own neutral vendor organisation that helps us to manage agency costs. So, we're doing what we can. I think everybody's under pressure, aren't they? Wage inflation's under pressure, but like every other business, we're going to make sure that we do our bit and try and retain our staff. There are some questions that have come in, which are all around why are things different to analyst notes and things. I will come back and I'll answer those separately rather than online. But just to clarify to people, we pass over information to the research analysts. They do their own notes, and so we're not in control of what they put or what their assumptions are. So sometimes their assumptions are not the same as what the company think they do themselves. So I will come back and answer them more in detail rather than trying to go through it now. But we don't publish those analyst notes ourselves. We just give information across, and then they look at how those forecasts work. So there will be some of that I can't tell you how they arrived at some of their figures, but we will answer those separately offline.
I think all I would add to that, Wendy, is that there is adjusted EPS and there's basic EPS, and what we've announced at 59p was the basic EPS, and yeah, absolutely, we will start to look at
we'll
that.
give you more information and actually publish that, so you get more information rather than trying to verbalise it now. I think that's the questions done from what I can see on the screen.
Wendy, Lisa, thank you very much for that. I think you've actually managed to address all the questions you can from investors, and of course the company will review all the questions submitted today, as Wendy and Lisa have just said, and we'll publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to you both, Wendy, could I just ask you for a few closing comments?
Yes, I mean, thank you for everyone that's taken the time to join us today. And if we haven't gotten across our, the feelings of where we are, our board, and I think everybody who works for Totally, are thrilled about the results that we've managed to put out. And I hope you as investors will see that everybody's working hard to do that. We believe the opportunities going forward for us to grow further are massive. We continue to focus on quality, and partnering with the NHS. And, the pandemic did us no harm in that, because we did respond proactively to supporting them. And they continue to ask us to help when pressure points actually come up. So we look forward to updating investors further in terms of growth opportunities and where we will be moving forward. But please watch this space on those acquisitions that we've already done and what we're going to do with them as part of integrating into the group and News for the Future. But most of all, thank you very much for your continued support.
Thank you.
Wendy, Lisa, thank you very much for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Totally PLC, we'd like to thank you for attending today's presentation, and good morning to you all.